Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
I want to go now to just some updates that we heard from the president. Another redhead crossing the terminal. All these headlines coming together now. The president says firing Jay Powell is unnecessary. The president saying the Fed will do the right thing. The president was asked specifically about other names that he has in mind for the next Fed chair. He says, I have a name in mind, maybe 3 names in mind. He did joke that with Senator Tim Scott that he would be a good pick, but he's not going to leave the Senate. The president said and reiterated there's no pressure for Powell to resign.
All right, let's head back to the nation's capital and to Bloomberg News Federal Reserve reporter Jonelle Marte joining us. Interesting to watch the last hour, the tour between the president and the Fed chair, Jay Powell. Obviously, some back and forth in terms of the cost of the construction being done at the U.S. Central Bank. Jump in. Tell us what you take away from watching the interaction and some of the commentary that we got from President Trump that followed.
So it appears that the president, he did have an opportunity here to really hammer the Fed, perhaps even more so on what's going on with their renovation. And, he's been very critical of them on social media, as you've noted. And he didn't necessarily do that. He kind of made some comments about how I sort of understand what happened and, these things get more expensive over time. And he did say, I would have done things a little bit differently, offered his input on, maybe he would have avoided some of these costs. But the bottom line seems to be that he did not escalate the confrontation. If anything, it felt like a little bit of a de-escalation here. And it was really another opportunity for him to bring back the message that he has been sending, which is that he wants to see lower interest rates. He would love to see lower interest rates. And, it is a reminder that this is a White House that is trying to exert more influence over these kinds of decisions that are typically viewed as independent central bank decisions.
What do you make of any central bank head or the head of the U.S. Federal Reserve? And I just think about every press conference that we see Jay Powell or any forum that he's in, certainly very careful and thoughtful about what he says, because he knows what he says can certainly impact financial markets. And I'm just curious about the back and forth of the Fed chair, certainly caught off guard, safe to say, right, with that new estimate on the costs, and then kind of correcting the president or saying, well, wait a minute, let me tell you what that's about. It was a little tense. So I don't know, what's the thought in terms of the Fed chair kind of pushing back there?
Yeah, of course, it was a unique image to see them side by side. Usually they're not interacting too much in person. And as we've noted before, it's really uncommon for the president to even go to the Fed, right? Before this, we hadn't seen it since 2006. So definitely a big image to see them together. And I guess not all too surprising to hear Powell push back. I mean, he's very much focused on numbers and the data. And if he hears a number that he's not familiar with, he wanted to see, they handed him the paper and then he clarified, okay, that includes another renovation that's already done, that was done several years earlier. So, I mean, I think that's what we have seen from Powell. He's really likely to say, and his message has been that he's focused on doing his job, focused on the economy. But of course, if he here's a number that doesn't sound right to him, he will speak up.
I can only think about what happens next week. Of course, we've been in this quiet period, so we haven't heard from a lot of Fed officials. Ahead of the meeting that starts on Tuesday, we hear from Fed Chair Jay Powell on Wednesday. That's the 30th. And I'm wondering if you're going to get any answers, or we're going to get any answers in Washington from the Fed chair, because I know that reporters who cover the Fed are getting their questions ready to ask him about this tour and ask him about the latest criticism.
So next week, for sure, we are anticipating that he will be asked about the tour and the renovations, themselves. They've gone out of their way to show the press around, to provide more information online about this renovation, because it has become a big line of attack for Republicans that want to maybe push Powell out or put more pressure on the Fed. So it's going to come up next week. We still are largely not expecting for the Fed to lower rates at this meeting, according to what investors are counting on, despite we are seeing at least two Fed officials, two Fed governors that were appointed by Trump, saying that they would support a rate cut at this meeting. So, it's an interesting time. We could have one or two Fed governors dissenting. But largely speaking, we're probably going to see Fed Chair Powell really kind of keep his options open, maybe more of the same, calling for more economic data before they make a big move on rates.
You cover the Fed. Are you hearing anything about all of this pressure and constant attention on Fed Chair Jay Powell, what it might be doing to him?
I can't speak to exactly what it's doing to him. It is something that people are watching. Is this mounting pressure on the Fed? It's not something that we have seen in recent times, but of course, it's not the first time that we've seen a president come after the Fed like this, or I don't want to say like this, but come after the Fed and try to influence what they do. But clearly, Powell has just kind of held his ground and been a staunch defender of the independence of the Fed.
Would it be bad to say if there's going to be... Oh, sorry, go ahead.
I was just going to say, so is that it for criticism of Jay Powell? Do you think they kind of got to meet in person and things softened between them in person? Do we see the president lay off him a little bit?
I can't speak for Trump, but I mean, I guess that would be surprising given how much he has said and how critical he has been. I mean, I don't anticipate that this will mean that he's going to stop calling for lower rates.
Yeah, I just see a meme.
I wouldn't take that bet.
Coming out of this in a big way.
The handing of the papers, just an iconic exchange.
There's going to be something that comes out of this. Janelle, thank you so much. Janelle Marte covers the Fed here for Bloomberg News, joining us from D.C.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Intel gave a stronger than anticipated revenue forecast for the current period. It offered investors a glimmer of hope, this as they wait for a turnaround under new CEO Lip Bhutan. Third quarter sales $12.6 billion to $13.6 billion, the company said in a statement on Thursday. Analysts on average had projected a number at the low end of that range. In the after hours and ahead of that call starting, the stock moving higher by about 1.5%. The company also mentioned layoffs that will reduce staff by 15%. I want to bring in Jay Goldberg. He's back with us. He's senior analyst, semiconductors and electronics at Seaport Research Partners. He joins us from San Francisco. Jay, you've got a sell rating on Intel, an $18 price target, updated just in the last week or so. Does this print change your view at all?
No, it doesn't. And first, I want to preface this by saying it pains me to say this because I want Intel. I really want Intel to succeed. America needs Intel to exceed, but they got a lot of work to do for them. And the thing that matters most is progress on their foundry, and that's still a ways out. And so in the interim, we're just looking at product. And this quarter it looks like product did a little bit better than expected. Data center looked a little bit better than expected, but unclear how they got there. I'm going to listen to the call and see what they say about PC outlook. I don't have a lot of confidence that they can sustain that for the year.
When you say America needs Intel to succeed, I think of what the administration before this administration did with the CHIPS Act. And I'm also looking at what this administration has promised when it comes to its own industrial policy. Is the U.S. doing enough, or should the U.S. do anything to help Intel succeed at this point? Or is this a lost cause?
I think Intel is savable. I think Intel certainly has the technology to do advanced semiconductor manufacturing. You look at their next process called 14A. It looks very promising and very competitive. And it's just a question of the economics more than anything else. Can they get it out the door in time? There are a lot of smart people at Intel. They really know their stuff. And so if they can get the economics to work on that next process, it looks much better for them. And so I don't know. I'm not a policy guy. I don't know what the right approach is. I think there are things the government can do to make it easier. Lots of things have been suggested, but I think ultimately Intel can succeed commercially with their foundry business. It can do it without government support. Government support, though, wouldn't hurt.
Interesting. Okay. Is there something that could come up, Jay, on the call, especially when it comes to the foundry business? Our Kujan Sabani saying the same thing, that this is crucial to their success going forward. Is there something that they could say that would make you have a little bit more hope for their outlook?
I'm really curious to see what they say about their data center business, right? They don't have a coherent, complete AI strategy right now, and they're aware of that. And I'm really interested to hear what Lip-Bu Tan has to say. He's certainly very smart and knowledgeable and well connected. They need more than they have, because they just really today don't have anything that that could conceivably compete against NVIDIA, and they probably won't for a while. And so, which way are they going to go on that? Are they going to try to compete with NVIDIA long term? Are they going to just try and make the best of it? They still have a good CPU core franchise. So I want to know how that is playing out in the marketplace, where you're seeing so much share, so much wallet share is going to NVIDIA. What's Intel going to do in that world where now NVIDIA is the dominant player in the data center, and Intel is sort of playing second fiddle, which is a role they haven't, that's new to them. They used to be the dominant one. So how do they fit into the order?
Sorry, is there room in the market for second fiddle? Is there demand for second fiddle, or does nobody want that because NVIDIA, they want to get the best, or what's viewed as the best from NVIDIA?
So there are two sides of that. One, on the GPU side, which is what NVIDIA makes. I think the market absolutely wants an alternative. That's not Intel today, right? Probably the closest alternative they have is the internal silicon that's coming out of the hyperscalers and AMD. Intel's not even in that race right now. Separate from that, there's a conversation about CPUs, which is Intel's core product historically, and they still have good CPUs. And there's a lot of money they can make if they can figure out the right way to position those CPUs in the AI data center. And I think that's where I'd like to see them put the most effort.
It does feel like they've done a lot, though. And they did talk about, Jay, that they see this restructuring substantially complete by the fourth quarter of 2025. So the fourth quarter of this year. I mean, he's getting things done. I don't know, like how much longer do you think, they're going to need in order to really get this company back on a course that keeps them around for a lot longer and keeps them, or gets them back to being a significant competitor here in the chip space and the evolution of where we are?
Yeah, I mean, Intel at heart, the problem is cultural. They used to be the dominant player, and now they're not anymore. And they need to reorganize not just the number of people, but sort of how everyone thinks about the problems facing them. And that's hard to do. And I think Lip-Bu can bring that about. He's done it in the past. But that kind of change takes a while. And I know that the headline figure is they're going to cut 15% of the workforce. I saw somewhere else that they're actually talking about at the management layer, they're cutting 50%.
Wow.
And again, this pains me to say because I have a lot of friends who work at Intel, but the company needed that, right? There's that middle management function has just gotten too bloated. And so, yeah, I agree. This is a positive step. It's a step in the right direction. And I apologize to my friends who are losing their jobs because of it, but this company needed to do this.
Hey, I wanted to shift gears a little bit because we're going to have NVIDIA report at the end of August, so just about a month away. August 27th is when we'll see earnings from that company. You have a sell rating on NVIDIA, $100 price target. We've spoken to you about it in the past. You are the only analyst on the Bloomberg terminal that has a sell rating on NVIDIA. Right now, the stock's at about $173.70. Give us your thesis here, especially in a year where NVIDIA's stock is up close to 30%.
So my thesis has always been that NVIDIA is a good company and makes good products. For me, it was much more a question of, can they outperform the rest of the industry? I don't think they can. Now, the way we're structured at Seaport, I don't have I have a sell rating. I don't have an underperform rating. But that's really how I've thought about NVIDIA. They're going to underperform companies like Broadcom, who are powering all the hyperscaler silicon. I think they're, people underweight their story, and I think they have a lot of traction here. AMD is showing signs of life in GPUs. They have a competitive product now, and they're firing well. And so NVIDIA is going to keep growing, but I think that the stock is going to underperform the broader sector. And I know it's been up a lot for the year, but it's actually underperformed Broadcom, and I think AMD underperformed my sector in that time. So I think that this NVIDIA is suffering from it. Just gotten so big so quickly, it's hard to keep the hits rolling. And I think that's the issue. Good company, but like they can't keep growing like they have been forever.
All right. We need to run. We're so glad we could touch base with you again. Jay Goldberg, he, of course, is a senior analyst, semiconductor and electronics at Seaport Research Partners. We've talked with him before. He's got a sell rating on Intel, a lot of headlines. And I'm just going to pull up once again what we're seeing in terms of Intel here after the close, now just up about 0.6%. So we saw a much stronger rally earlier in the session. This is after the company gave an upbeat sales forecast after PC demand picks up, but there's a lot more, and we're waiting that call with analysts and investors. We'll track those headlines for you.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, shares of Alphabet, they are higher today off their best levels. They were up as much as 4% right now, a gain of just shy of 2%. The Mag 7 stock that has been one of the largest market caps out there said demand for AI products boosted quarterly sales and now requires an extreme increase in capital spending. So heightening pressure on the company to justify the cost of keeping up, Tim, in the AI race.
We're delighted to have with someone who's closely followed for her coverage of the media, entertainment, and internet space. With us from Los Angeles, Laura Martin, senior analyst over at Needham & Company. I want to start with Alphabet, where we're going to talk about a lot with you over the next few minutes. You've got a buy rating on the stock at $220 a share, price target trading at $193 as we speak. It bounced around after market yesterday. It's gaining today. What's important to you from this latest quarterly update?
The single most important number to offset the bears is the search number. So search revenue up 12% was well above the whisper number of 10% growth and above the Wall Street consensus number of 9% growth. And they also had 4% click volume, which basically is the same as last year. And that's up from 2% click-through rate in the first quarter, which is positive because the bear case here is that generative AI answers lower than the economics of Google search, which is the big money engine here. So the single most important number was that search grew ad revenue 12%, which was 300 basis points above consensus view. The second most important number is cloud, right? They're still out of capacity with cloud, but their cloud business grew 32% at a 20% margin. So that's fantastic. So they're really pricing up now that they have capacity constraints. And the third most important number is YouTube. YouTube grew 13% of revenue, and we think it's worth $73 a share here if it was separately tradable and not confined within the Alphabet conglomerate. So, but I would say those are the three most important segments that people are talking about. But the bear case really is highly focused on the search revenue growth.
And that's exactly where I want to go right now. Going into this print, there was so much concern about the cannibalization of traditional Google search. Why aren't we seeing that?
So what they're saying is that what happens when you have those answers, when you put in a Google search and then you get an answer, is that people are spending 10 times more time, 10% more time asking the next question. And that the shortfall in clicks per query is made up by the fact that people spend 10% longer, which then lets Google serve more queries or more ads. So that's what they're saying, is that the demonetization is about equal. That's their words, about equal. But I think part of it is the extra time people spend using the answer format is offsetting the actual, the downdraft in the economics per query.
Hey, the extra spend, the up again CapEx, initially everyone was saying, well, that's why the stock traded down in the aftermarket. It made some folks, or at least some investors, it felt like initially nervous. What is your take on that? I think our own Mandeep Singh was saying, well, listen, it sounds like they are getting the demand and they're spending to meet that demand.
Yeah, I mean, I would say that. I would say the other thing that's going on is that I think one of the reasons the stock was a little volatile is the operating income grew 14%, the top line grew 14%, and it sort of looked like there was minimal operating leverage. But what they told us on the call that was buried in the financial statements is those costs included $1.4 billion fine, legislative fine, regulatory fine. So if you subtract that just to look at costs, the most important point we would make that I think largely is being missed, it doesn't have to do with revenue, has to do with the fact that by integrating generative AI into every aspect of their business, they've got really accelerating revenue, which everyone's focused on, but their costs are going down. Okay, that's not fair. Their costs are just not going up as fast. There's a lot more operating leverage here if you exclude the fine. So I think that's why I think once they said there was this big fine in the costs, people realize that generative AI is really lowering or increasing the productivity here. And so the operating leverage is at margin expansion is faster than people think at a time when revenue is also accelerating over consensus view.
One thing I loved in your research, and you put this right up top, Laura, is you said we like Google's strong strategic position as number one in search, number one in streaming, YouTube, number two in mobile, Android, number three in cloud, number one in autonomous driving, Waymo, which Tim and I are both in love with. And you say LLMs make data more valuable and Google's data is best in class. Again, your view. Is Alphabet in many ways the one to beat? And why hasn't the stock been, I don't know, doing more this year?
You know, I think Google, so I would say their execution has been very haphazard. It's not. And Wall Street really prefers leaders that lead from the front, like Meta, like Mark Zuckerberg. We like, visible, clear, visionary leaders. And that's not what's going on here at Google. But, Google, sort of despite itself, really does have the human capital and culture and financial resources to fund what will be a retooling of American business, which is the generative AI backbone infrastructure that they're building, and they're leading by executing within they're showing what's possible by executing, implementing generative AI into everything they do, every product they have, and every cost center they have. So this is what's about to happen to America over the next decade, is companies that follow Google's lead will have increasing margins and accelerating revenue. And if you don't, which requires a cloud, by the way. You can't do this without cloud. If you don't, you will go out of business because, in my opinion, because the companies that use generative AI to increase productivity and margins and increase revenue will get higher multiples from Wall Street.
I know you said search,
cloud, streaming,
search, cloud, and YouTube are the three most important numbers, but we'd be remiss if we didn't ask you about Waymo and the expansion that the company said is coming in the, quote, near future. Here's what they said. Alphabet hopes to expand Waymo to all cities in the near future. How do you look at this as an analyst on this company's stock, as an analyst for the company, and material contribution?
So you guys love the service. You just said so. So I don't like it in this sense. That right now, I think the most strategy is what you say no to. And what Google should be saying no to is anything that isn't generative AI related, because this is a race and a war. And they are spending a fortune on generative AI. Good for them. But Waymo is another huge sunk cost or financial commitment. And I would like them to figure out a way to do Waymo. They are ahead. They are number one in autonomous driving. I would like them to keep the data, because I think data in the real world plus the virtual world is worth more than either world standalone. So I like the data aspect of Waymo, but I do not like the capital commitments, which compete right now with the generative AI capital commitments.
What are the capital commitments? They haven't been totally clear about that. What do you view them as?
Well, they sit in other bets, and I think other bets I'm forgetting, but it loses typically $3 to $5 billion a quarter. So it's like $20 billion a year. And a lot of that is Waymo, and it's their healthcare initiatives. And so I just think that money, they just upped CapEx by $10 billion. I would like to see them take it out of other bets, but the primary other bet is Waymo. So I think they're unwilling to relinquish their pole position because now Tesla's coming after them. So I think they are number one in all of these strategic segments because they get there early. And so they're early to Waymo. I just wish it wasn't as capital intensive. The losses weren't as big at a time when Google should be spending all of its focus and resources on generative AI.
Laura, we really, really, really like Waymo. I'm just going to tell you, really, I even closed my eyes in a Waymo. That's how comfortable
Laura's
I felt.
in LA where they have Waymo.
I
We're
know,
in New York
she
where they don't have
knows.
Waymo yet,
I know.
so.
Hey, listen, we've got about 3 minutes left. There's so many different places we would love to go with you, but you pick, because we've got Apple reporting next week, Meta reporting next week, Amazon reporting next week, Disney in early August, Netflix already out, and then there's the late night wars. What's interesting to you right now that you think the Bloomberg audience and investors really need to be paying attention? And it can be something else beyond that.
Let's do Apple because it used to be the biggest company in the world. Now I guess NVIDIA is. But what I would say about Apple, we have a hold here on Apple, whereas we have a buy on Alphabet, Google. I think Apple is in a box because when you listen, for sure, when we hear Meta, who's spending hundreds of millions of dollars per person to create a super intelligence generative AI group. And yesterday, there was no sentence on the Google earnings call that didn't have AI in it. So, these companies are really talking. Amazon will also, because that's being run, Amazon now is being run by the AWS founder, essentially. He talks a lot generative AI a lot. So the one that's not the same is Apple, and people really want to see what's happening with their generative AI strategy. And how is Apple either iOS 16, iOS 17, iOS 18 going to keep up with Android, which is Google, who last night told us they're integrating generative AI tools into everything, including Android. So I do think there's a bigger threat to Apple's only business, which is its iPhone business. We think it's a single product company with upsells to other devices. We think the anchor tenant there is the iPhone. So we really want to hear how they think they can compete when they are saying nothing about generative AI. And they're spending $12 billion on CapEx, which is the same number at Apple for the last 3 years. When we every single quarter, we show up on the Amazon call, the Meta call, the Google call, they're raising CapEx by $10 billion at a time, every quarter.
30 seconds on Apple. Is Tim Cook the right leader to guide them through the AI era?
Oh, so harsh. I'm going to go with no, but so harsh. No, I don't think so. I think we need a wartime CEO. And I think Tim Cook is great at a lot of things, but I don't think he's not proven great at this technological disruption called generative AI.
Got someone else in mind that you think should lead it? 10 seconds.
It's an impossible job. So no, I have no idea in mind for who could replace him.
You rock. Come back soon. And I think you are coming back soon, which we're looking forward to already. Laura, be well. Laura Martin, senior analyst at Needham & Company, knows this space like no other. So glad we could get some time.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, speaking of the president denied he was seeking to ruin the business empire of his one-time ally, Elon Musk, as retribution for their dispute over the president's signature tax law. President Trump posted on social media earlier today that he wants Musk and all business in the U.S. to, quote, thrive, and that their success is good for the country. This, Carol, on a day when Tesla shares are just absolutely tanking. Elon Musk did warn of difficult times ahead for the company, and that it will be in a transition period for the next year.
That's right.
More.
The stock down about 9% as we speak. All right, Ross Gerber was here with us yesterday, getting us ready for Tesla earnings and on the day that they were reporting. He joins us again today to tie up the headlines from Elon's call last night with investors. He's a longtime investor in Tesla, an owner of Tesla cars. He's the president and CEO of Gerber Kawasaki Wealth and Investment Management, and he has about $3.6 billion in assets under management. Ross, so glad you could give us a little bit more time today. So thank you. Just about 24 hours since Tesla earnings, not quite, but almost. We've had Elon's call with investors. What is or remains your investment thesis on Elon and Tesla? Because you seem to certainly have pulled back and are a lot more cautious.
I think probably my biggest issue is that what I believe is best for Tesla isn't actually the strategy being employed by Elon. And what I think is best for Tesla is to be focused on selling great EVs that can drive themselves versus completely pivoting into this robot and robo-taxi business because they're struggling to sell cars. Because what we're seeing now, which I suspected to be true earlier, is that the deterioration of the EV business is really, really bad for Tesla, and it essentially is an EV business. And so hoping that robotaxi and robotics is going to be a revenue stream and let alone profitable anytime soon is really just not going to happen. And so, as Elon said, Tesla's in for some pretty tough quarters ahead. And with the ending of the tax credits and all this kind of stuff, I mean, this is all bad news.
When you say it's not going to happen anytime soon, what do you mean by that? Give us your own timeline here.
Well, we follow Waymo very closely, and we think that Tesla is 2 years behind Waymo as far as the development of their robotaxi. And now Waymo is scaling and being quite successful at charging, the right amount for rides and generating enough revenue that it's meaningful. So I think it's at least 2 years, right? So where Tesla's at, for them to generate any revenue at all of meaningful ability will take a couple years. And then from a profitability standpoint, we don't even know if that business is going to be profitable with all of the competition that's coming into the robotaxi business.
So you said yesterday, you reminded us that you've been selling shares of Tesla. I think there were reports too in June that you sold about $60 million worth of Tesla shares, and you cited the waning confidence as you're laying out here in the company's future. Are you selling more? What's your exposure at this point?
Yeah, we still have, on my last 13F, we had over 200,000 shares. Right now we're holding a little less than 200,000 shares. So we continue to sell the stock. We have a lot of diehard Tesla clients that you have huge gains because we bought the stock at like $2, and so people aren't that excited to pay taxes. And there's still this possibility that Elon could change course and really do the things necessary to fix Tesla, because fundamentally Tesla's a great company. Most, if not all, of Tesla's problems are self-created because of the CEO, Elon Musk. It's not that Tesla's core business has some big problem. It's actually the opposite. The CEO is the problem, which is super unique. So that's why I'm loath to just be like completely out of Tesla. But on the other side of the coin, with the valuation where it's at, and basically we think they're not going to be profitable next year, the stock needs to move meaningfully lower in my mind before I would buy it.
How low? What's meaningful?
Well, I don't know if any of the analyst estimates for next year are right. I think they're all vastly overstated. But even if you did $3 of earnings next year at 50 times earnings, which is NVIDIA's multiple, you'd be at $150. And then you put some premium on the Elon Musk robot premium. Maybe you put on $50, $100. So you're at, $200 to $250 a share is where I think Tesla should be.
Okay, $200 to $250 a share. Right now at $303 a share, down 8.8% today. Hey, Ross, in the past when we've spoken to you, you've been really critical of Tesla's board. You've been critical of it on social media as well. The board does include folks such as Kimball Musk. It includes James Murdoch. Most recently, it added Chipotle's Jack Hartung to the board. Are you any less critical of the board now? Do you think the board is doing its job?
No, I think there is no board. I think the board is Elon Musk. And so the board is just, it's like a weekend at Bernie's, it's like a bunch of bodies that they put at a desk and Elon tells them what to do and they do it. This Jack guy they just put on probably had no idea what he was getting himself into, and he's in deep now. So I don't actually think the board of directors cares about anybody but Elon Musk. And I think investors in Tesla know that at this point. And that's why we're ultimately sellers, is nobody actually represents retail investors, which still own 87% of Tesla. So it's really a unique situation. And I expect Tesla to buy XAI at some point for probably $200 billion, some outrageous price. And I think that's the next thing that will happen. So, there's no question that the merging of these businesses seems to be on the horizon.
Hey, before you go, I definitely want you to have you weigh in, Ross, on what President Trump put out on social, that he denied he was seeking to ruin Elon Musk's business empire as retribution for the dispute over the president's signature tax law. What's your read
Well,
on
I mean,
this?
I
Might
think-
this be helpful to Elon and Tesla? We just got about a minute 10.
No, Trump's just being the bigger man here and trying to, act like he doesn't have a tiff with Elon, because he's so mature or something. But the truth of the matter is he's already done what needs to be done to destroy Tesla by taking away all the subsidies and making EVs much more expensive. And so, he doesn't have to say anything anymore. Elon's dug his own grave, and he's going to have to figure out a way out of it. So Trump doesn't have any reason to look bad or grind an axe, and Trump's playing Elon like he has the whole time.
30 seconds. We have talked with you about your Cybertruck. We talked about others, that you have owned. Would you buy another Tesla? Do you still like the cars? Just quickly.
I do. This is the whole issue. I've looked at so many other cars to buy, and I want an electric car, and I want a great electric car, and I still think Tesla makes the best cars. And Rivian, I have a Rivian too, so I think they're a close second, and they make a great vehicle as well. But I just haven't been compelled by any of the other vehicles, EV vehicles out there. And so, I still kind of like my Cybertruck, and
I know.
I can't sell it anyways, but Tesla makes great vehicles, and it's a great time to buy an EV before the discounts go away.
Ross Gerber, you're incredible. Of Gerber Kawasaki Wealth.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.